Now, our first story of the day comes to us from the Daily Hodl, and we're going to be talking about Coinbase CEO Brian Armstrong and his recent comments. Now, Coinbase CEO Brian Armstrong has made comments recently suggesting that Bitcoin might be surpassed in the future by other digital coins as the crypto industry continues to mature and evolve. Now, I know, I hear the hisses and the boos, and trust me, I am right beside you, but let's see what he has to say and at least try to understand where he's coming from a little bit here. Now, let's look at his Twitter, describing his crypto industry forecast in a series of tweets, Armstrong highlighted interesting parallels between the development of the early internet and cryptocurrency. And although this is an argument that we have hashed out many times on the channel, let's do it again because there's nothing like redundancy beating you over the head with the same information to make sure it gets through there. Now, the challenges, he says, faced by early adopters and developers of modern telecommunication and internet technology are comparable to the issues of the new crypto industry, is comparable to the issues that the new crypto industry is dealing with. So quoting him here, at Netscape, they were working with early internet protocols. Things weren't very scalable, dial-up modems. You had to be somewhat technical to figure out how to get online, and early websites were pretty basic, static sites looked like toys. Does this sound familiar to crypto at all? They figured they'd try to making a shopping cart, see if they could build a first-party app. There was no way to save state or create a session, for instance, to make a shopping cart, so they created the concept of cookies. Then the next problem was that nobody wanted to put a credit card into the internet because everything went plain text over HTTP. So they went and invented SSL, HTTPS, end quote. Now, interesting to note there, I don't know if you guys remember Mosaic. Mosaic was the first browser to ever introduce pictures and text in the same browser, and internet usage increased 1,000% after the launch of Mosaic back in 1993. But Mosaic, with that massive launch, was overtaken by another internet browser just 1 month later, which was Internet Explorer. Now, Internet Explorer lost its dominance to Netscape there briefly, which had a much better package, much better user interface back at that time. Then we got into 1993 to 1999. There was this massive tech boom where, again, investors were kind of taught that, hey, don't worry about things like profitability or, sustainability, just invest in anything that's got a .com. If you guys remember, Pets.com paid millions of dollars to make a talking sock puppet, a national mascot that nobody had ever heard before during the Super Bowl, and then 2 months later filed for bankruptcy. Because, America went into recession by 2002. So anyways, what's interesting to note there, by the way, is that Y2K actually did not cause the tech crash. It actually... the Y2K fears made people run out and buy a whole bunch of computers and stock up and really kind of accelerated the movement to the upside. But the NASDAQ hitting insane levels that took years to recover. So anyways, getting back to Brian Armstrong here, and I just wanted to have that brief deluge about Netscape. But Armstrong explains that just like the early internet pioneers that came up with new web tool solutions, like we just talked about, SSL, HTTPS, cookies, the barely decade-old crypto industry will develop next generation innovations. Yeah, it's called Lightning. Now, he describes slow internet speeds and dial-up modems as equivalent to the challenges faced today in scaling blockchains, and development of encryption solutions such as SSL and HTTPS are similar to what privacy coins are trying to accomplish now. Right, yeah, Lightning has private transactions. Now, according to Armstrong, the two major features that digital coins will need to address in order for them to reach mass adoption are 1, scalability. So he says that we need blockchains that can get to at least thousands of transactions per second to get mainstream adoption of cryptocurrency. So similar to broadband internet being a big unlock on the web, which led to a big unlock called TikTok. Yeah, that was me. 2, privacy. Now, this is perhaps a contrarian view, he says, but he thinks that we will need privacy coins just like we needed HTTPS and SSL as the default on the web. For many use cases in cryptocurrency long term, everyone deserves access to financial services and financial privacy. Okay. Now I can certainly see that. Again, Lightning has private transactions. Now, as far as the transactions per second, my argument would be here is that Bitcoin does not need that on the base layer. There's already innovation that's being done on second layer solutions for this. I don't think that Bitcoin itself as the main chain needs to ever hit that sort of transactions per second, because I am going to side with the settlement argument If you haven't heard of that, definitely pick up the Bitcoin Standard by Saifedean and Amos. It really will open your mind and show you what Bitcoin is truly designed to do, and really kind of break down and divide and educate you on this whole store of value, medium of exchange argument that the big blockers, wanted to go down that rat hole when they split off back in August. Long may they rest in ashes. Now, as far as right, so Bitcoin as a main chain does not need to scale, does not need to do all these transactions per second, and something like the Lightning Network is fully capable of handling that. But again, we already have these payment solutions. We already have Visa, Venmo, PayPal. All those can be settled in Bitcoin. So this idea that we need to reinvent some sort of network that will handle transactions per second, I think is not correct. I think that we can use the existing infrastructure of Visa, MasterCard, Venmo, PayPal, all the stuff that already exists there. And instead of settling them by privatized, centralized banks through United States dollars, where settlement can take up to weeks, we can settle them on the Bitcoin blockchain, end of week, end of month, end of year, and it'll take 10 minutes. So it's the settlement and the security that is absolutely important. Everybody that's already transacting is already using currently third-party intermediaries to basically hold their transactions in a personal, centralized, private ledger that is private to the bank or the financial institution. Now, I don't think that that's where we want to be long-term. Bitcoin does solve this problem long-term, but obviously the first step is just taking existing infrastructure, Visa, MasterCard, PayPal, Venmo, and having that settled on blockchain. That's all we need to do. We have the infrastructure. We don't need to worry about that right now. I do not get this argument where people think that we have to have Bitcoin compete with Visa right now. No, Bitcoin can supplement Visa right now. You just have Visa transactions settled on the blockchain at the end of the week or at the end of the day. This is very easy because it doesn't matter really the size of the transaction for Bitcoin to be settled in. That's largely irrelevant. I mean, we might, if we're talking about trillions, the network scale. So, right. So just putting my 2 cents in there, I think that we do not need to focus on transactions per second. I think that that's silly. I think that we need to focus on settlement right now and bootstrapping Bitcoin to be the settlement layer for current existing infrastructure. And once we have that done, then we're going to have so much innovation, so much development happening in Bitcoin that, I mean, your eyes will roll back in your head. These things will come so fast because the demand for them will be there, right? So again, this is not Keynesian economics. The government does not create demand. You cannot artificially create demand. The demand has to exist in a free market, and then innovation occurs because entrepreneurs step in to take advantage of those inefficiencies in the market. This is how value is created. So getting back to Brian, with scalability and privacy being 2 weak points of early blockchain technologies such as Bitcoin, Armstrong feels that there is a major opportunity for next generation blockchain projects to eventually become the dominant crypto assets of the future. So again, kind of siding with this argument that, well, what Bitcoin should be focusing on right now, look at what these other chains are doing. And again, I don't know a priori what's going to happen in the future. I don't know what the free market is going to value. If they're going to value settlement, which I think that people who are like more forward thinking and believe in hard sound money and how critical that is to a productive society is. So Bitcoin there is my priority because I think that that's the most important thing to do right now. Other people might, over prioritize these fancy bits and bobs and really, recreating the current financial infrastructure on the blockchain, which Ethereum is already trying to do with DeFi. And I fully support that. I think that's awesome, man. Because you can move so easily between Bitcoin and Ethereum. So, hold your value in Bitcoin. And if you want to take advantage of things like loans and tokenization and all that stuff, well, Ethereum's already doing that on Ethereum's blockchain, right? And I think that eventually that will be done on Bitcoin's blockchain. So, but I digress. So in conclusion, from Brian Armstrong, Brian Armstrong's conclusion is that he thinks that it's still pretty much up in the air what blockchain is going to is going to help crypto get from 50 million users to 5 billion. The chain that manages to ship some of these scalability, privacy, and decentralized identity solutions, as well as developer tool solutions, SDKs, and things of that nature, will have a big leg up. And I certainly don't disagree with him from there. Making development easy for those who want to participate in the ecosystem, having SDKs and easily downloadable development tools, that's absolutely critical. But again, we'll go back to the free market standpoint here. When the demand is there from the market, then the innovation comes. Right? So Lightning development is proceeding along beautifully. A lot of projects are proceeding along beautifully with their development as well. Ethereum is moving right along with Ethereum 2.0 set to launch this year. So I fully support all of these projects, but I think that the idea that what needs to be prioritized is recreating Visa on the blockchain is what's going to make it instantly scale, or excuse me, what's going to make it instantly reach mass consumer demand. I don't think is going to happen. I think that there's going to be a demand for sound money, and then that is going to drive innovation because money will be flowing into Bitcoin. Just listen, how many blockchains launched in 2018 after the massive run-up of Bitcoin and altcoins in 2016? So for Bitcoin and altcoins, so from 2016 to 2017, and then altcoins had that massive pump at the beginning of 2018, right? So how many blockchains, how much innovation, how much development was done in 2018? More than had ever been done on an exponential level relative to what had been done in cryptocurrency before. Why? Because there was all this money sloshing around, right? So exactly the same thing. When there is demand for hard and sound money, which Bitcoin is, and that demand starts to flow into Bitcoin at a very fast rate, the money will be there, the demand will be there for innovation and development of new goods and services. That's how it happens. You do not artificially create demand by trying to predict what the market wants. You can, of course, and companies do this, and some have success, most don't. But what you really do, the more successful entrepreneurs respond, are reactive to demand that is currently existing, right? And they try to get first in. I think that's how that'll go down. That's my personal opinion. Please let me know your thoughts in the comment section down below. Do you stand on the side of Brian Armstrong? It's really up in the air, which it really is. I'm definitely not disagreeing with him on that one. Or do you feel that there is kind of a more clear vision and a way forward?